I am absolutely in shock at what is happening with the electric vehicle market. Ladies and gentlemen, my name is Forrest. I invest in stuff. You should too. Today we are talking about CCIV and Lucid Motors, their potential massive upside, and how you and I can both make money trading on CCIV. First, a little bit of background on Lucid Motors. They are a US-based electric vehicle company. They are currently still ramping up production. They have a facility that finished phase one, or really they just finished their phase one rollout of their production facility in Casa Grande, Arizona. They currently have an annual output of 30,000 vehicles per year. To put that into perspective, Tesla just output 500,000, 500,000 vehicles in 2020. So on a percentage basis, they're basically not even close. They're essentially where Tesla was back in, like 2009, 2010. They are a few years behind for sure. Their phase two rollout will up their production numbers from 30,000 up to 90,000 vehicles, which is basically a 3x rollout. It is a great look, great long-term outlook in terms of production numbers, but still a decent set behind Tesla. Now, given that, you're probably wondering, well, Forrest, given that they're so far behind Tesla, are they a true competitor? I think yes, that they are, and I'm going to give you a few reasons why here in a second. Before that, though, we need to also talk about CCIV. So CCIV is a blank check company. They are a SPAC, a special purpose acquisition company. So this is your first time hearing about what a SPAC is, or a special purpose acquisition company. Basically what they do is they are a company who's created for the sole purpose of acquiring another company. They raise a ton of money. It just sits there in their bank account until they make an acquisition. What this allows them to do, and what it allows for private companies to do, is a private company can basically go public without going through all of the hoops to become public just by getting acquired. It also gives them a huge injection of capital from the SPAC through all the money that they've raised, and allows them to basically greatly accelerate their business while going public. Going public, of course, is another great way to just get an injection of capital, because people can then you're basically raising funds from the public. If you're not familiar with why companies IPO in the first place, or really do anything where there's some capital event, it's because they're trying to raise money. That money then goes back into the business. Or on the flip side, it's because that they're trying to basically let their shareholders sell in some case too. So it's a little bit of a mixed bag, but generally you do that as some type of way to get injection of capital into your business. CCIV on the past week alone has seen some crazy price movements. Let's actually jump into the charts here really quickly. So I have Robinhood open now. Let's go ahead and look for CCIV, Churchill Capital. Current stock price is $39.34. Now it is Saturday, February 13th when I'm filming this video, so the market is closed. So if we go to their 1 week chart, we can see that they are up 15%, or 15.10%, which is a $5 change. And if we look out again over their 1 month period, they are up over 160%. I actually want to talk about my position. And while we're here, we can quickly look at my account. I think it's good to prove that I actually do invest in stuff. Total account value right now is $309,000. You can actually see it there. Maybe, come on, focus camera. You can do it. Yep, $309,000. Let me get myself back in focus. Can I do it? All right, we're back in focus. But yeah, so total account value is $309,000. Go ahead and look at my CCIV. So I own 6 $20 calls. Right, current equity of $13,440. Got in at an average cost of $5.90, and I'm up $9,000 right now. These expire on May 21st, so I have a little bit of time on this position. Go ahead and close this. So what are my thoughts there? Why did I enter in that position? I got in at a good basis. And like most of my trades, I'm a swing trader, so I'm really looking for, when I first got in this position, something that people were talking about, something that had a good amount of upside, right? So if the basically if I looked at my downside, it's like this with my initial cost of my contracts, then my upside, especially with calls, is nearly infinite. And playing call options on a SPAC play gives you a huge amount of possible upside due to way that volatility is going to increase, and ultimately the amount of money that is going to be poured into these things over time, especially as they get closer and closer to their events. So if this merger actually does go through, we're going to see some exponential growth of this stock. Now, what's different about this than some of my other plays is that I actually might have a longer term look on CCIV. It might actually goes in the share. So let's actually talk about the next part of my video here, which is how do you make money on this. So the first thing that you're going to want to do is hit the subscribe button, hit the like button. That is the best investment that you can make, is actually in this channel. Get in while the price is low. I'm trying to get to 10,000 subscribers, and you could be the next one. If you want an early inside look into all of my trades, all my positions, go ahead and join my Patreon. That'll give you access to my Discord, where I'll be chatting about things that I'm doing and sharing that early access information, as well as also a great way to support my channel. The other thing that you need to realize is that near term and long term, these are two different plays. So near term, you kind of have to play it like you would play any typical SPAC play, and that is right after the merger goes through. If it does, there's going to be an initial dip in price. This is just the way that these things work. There's probably a lot of reasons for this, but basically it's going to ride the hype train up and up and up and up, but then the merger is going to happen, right? The news happens and people are going to sell the news. It's going to dip. I might sell off a little bit there. I might actually just exercise my shares because of the other side of this, which is the long position. So recap on the short side, if you're thinking near term, shorter side is the merger goes through, you ride the wave up, sell the news, you might get back in on the dip to establish another position, but that's really how you're going to play the short term side. Long term, you pretty much just ignore those movements entirely, because we have to think about the EV industry in general. Tesla has seen some truly insane growth because they were a first mover in this industry, and they actually have done very, very well. They have vertically integrated. Lucid Motors, their CEO, one of the greatest things that he's ever said, and why I'm so bullish on this company, is that he realizes that vertical integration is truly the way that you innovate in this space and beat the competition. If you are outsourcing core components of your manufacturing and your business to honestly other competitors, then you're not going to be able to reduce your fixed cost and all of these things that go into creating a truly superior product, especially when in the EV world range is such a hot topic. Being able to have the security that when I get in my car that I actually use it like I would a gasoline car, with the convenience of being able to recharge and do all of those things. Basically, I don't want to get into my $70,000 car and then be afraid of it dying on me all the time. That's kind of like the old school fear of EVs. People aren't really afraid of that anymore. But generally speaking, if you want to create a highly efficient EV vehicle, then you need to own all of these layers of your manufacturing, and Lucid Motors CEO agrees on that aspect. Long term, the play is shares. Honestly, I think the play is shares. I might establish some leaps. I might exercise the positions that I have. I really like having 1,000 shares in the things that I'm bullish on, at least. The biggest problem that I have right now is that all $300,000 in my portfolio are placed. They are all in bets that I really like, and so I don't really have cash handy to deepen my CCIV position. We'll have some more cash. I'll just be putting more money in, from my day job, which is in sales, doing that, deepening my positions. But hey, you can't win them all. I would love to put like 100 grand if I could, into CCIV. Honestly, I would. Right now, I just don't have that capital available. I have capital in some other big bets that I'm making that I think will play out just as well. Again, this is not financial advice. I'm not a financial advisor. I'm just a guy sitting here who needs to check that I'm recording, and I still am. Make your own decisions, do your own due diligence, do your own research. Let me know your thoughts about that research down in the comments, because I love talking with you. For those of you who are dissenters and love arguing, honestly, I appreciate your dissent as well. It makes everybody a better investor when we, put our heads together and talk about these things. So to wrap this up, near term, play it like a SPAC. Play it completely like a SPAC. Ride the wave up. Sell the news. 2, subscribe to my channel. If you haven't, that'd be really weird. And 3, long term, I would just buy shares. I think the upside in the EV industry is beyond something that we can actually put a simple valuation on. Saying that this thing could 10x seems pretty reasonable to me. If they're a successful US-based EV company, just really look at Tesla as an example of the amount of growth that we can expect. I think that the EV industry is much bigger than just the cars. It's in all of the infrastructure, right? The charging stations, batteries, anything and everything, the integrated solutions. If we look at Tesla kind of as a model for how to do this business, the services that you can sell on that, the self-driving services, the apps that you can sell in your car. An electric car now is much more like I'd say an Apple iPhone, in that it's a part of an ecosystem. It's not just a vehicle anymore. You're actually selling somebody the keys to your ecosystem, and all these services, software services, are on top of that. And so I think the amount of value that we could see long term, 5, 6, 7 years, is massive. If you're new to the market this year, 5, 6, 7 years might seem like too long to you, but honestly, we're in some weird times, so you definitely look long. Looking long is the way to make money. In general, the market goes up. There's upward pressure for companies, right? There's more money being printed. There are more people being born, and revenues go up year over year. So there's generally upwards pressure. Look long. Looking long is the best way to make money, and it is the best risk mitigation I would say that you can do in your portfolio in general, but we won't get too much into that. That is the end of this video. I really like CCIV as a play. Might not go through, but hey, that's what we're here for. We're here for the big bets. We're here to make a lot of money. That is it for this one. Thank you for stopping by. My name is Forrest. I invest in stuff. You should too. And until next time, have a good one.